Housing Market 101, presented by the Fagin Willis Group at Keller Williams. In this video, we will explain some of the common terms and factors that professionals consider when advising consumers about the real estate housing market and buying or selling property. These factors are supply and demand, absorption rate, the economic cycle, and a few additional housing market terms. Supply and demand. The simple explanation of supply and demand is this: low inventory supply equals higher prices, balanced inventory supply equals stable prices, and saturated inventory supply equals lower prices. However, there are many factors that can impact pricing other than just simply inventory. Interest rates, job market, consumer confidence, election years, and how many buyers are actually looking for homes, which is an immeasurable factor. Historically, real estate markets that experience double-digit percentage increases in pricing month over month and year over year are not sustainable and will realize a correction in 1 to 3 years following the price increases. Absorption rate. Absorption rate is the speed or rate at which houses matching particular criteria are sold or absorbed into the market. For a good calculation, you will want to compare homes using the following minimum criteria: area or neighborhood, style, age, size, and price range. Ask your Fagin Willis Group realtor to search for how many homes were sold in the last 6 months using this criteria. Dividing the number of sales by the number of months tells us how many homes the market is absorbing each month, or the monthly absorption rate. In this example, we have 23 homes sold in the last 6 months, which gives us 3.83 homes sold per month. Now, to find the months of inventory, ask your Fagin Willis Group realtor to search how many homes are currently for sale using the same minimum criteria. Divide the number of active listings by the number of sales per month, and that will tell us how many months it will take to sell the existing inventory. For example, 3 months equals 12 weeks, 1 month equals 4 weeks, a half a month equals 2 weeks, and so on. In this case, we have 19 active listings. Divided that by an average of 3.83 homes sold per month, which gives us 4.96 months of inventory. In our example, we had almost 5 months of inventory. On the scale below, this demonstrates the simplest overview of the current market conditions in any given area. The current conditions for the example area would indicate a balanced or transitioning market. Economic cycle. Economic cycle, or stages of the economy, are identified as having 4 distinct phases: expansion, peak, contraction or recession, and trough. An expansion is characterized by increasing employment, economic growth, and upward pressure on prices. An expansion period will have characteristics such as increasing confidence, healthy economic growth, inflation remains low, and the markets will show short rates as neutral, bonds are stable, stock markets strong, commodities strong, and property prices picking up. A peak is the highest point of the business cycle. When the economy is producing at a maximum allowable output, employment is at or above full employment, and inflationary pressures on prices are evident. A peak period will have characteristics such as a boom mentality, inflation gradually picking up, policy becoming restrictive, and the markets will show short rates rising, bond yields rising, stock market topping out, commodities rising strongly, property prices rising strongly. Following a peak, the economy typically enters into a correction, which is characterized by a contraction or recession, where growth slows, employment declines, unemployment increases, and pricing pressures subside. A contraction or recession period will have characteristics such as confidence suddenly dropping, inflation continuing to rise, inventory correction begins, and the markets will show short rates peaking out, bond yields topping out, stock market starts falling, commodities start falling, and property prices topping out. The slowing ceases at the trough, and at this point, the economy has hit the bottom for which the next stage of expansion and contraction will emerge. A trough period will have characteristics such as confidence is weakened, inflation peaks, production is falling, and the markets will show short rates dropping, bond yields dropping, stock market bottoming, commodities weakening, and property prices weakening. There is a fifth cycle that many economic experts feel is equally important, a recovery period. This period follows a trough period, which is an extremely low period that is not always encountered in every cycle. A recovery period will have characteristics such as stimulatory economic policies, confidence picking up, inflation falling, and the markets will show short rates low or falling, bond yields bottoming, stock market rising, commodities rising, and property prices bottoming. Additional housing market terms. Some of the common terms you will hear when speaking to a professional about the real estate market include median price. This is the exact middle sales price between the lowest priced and highest priced homes sold for any given period of time. Average price. This is the average sale price taken for all homes sold from lowest to highest for any given period of time. Days on the market, also known by the acronym DOM. This is how many days a property was on the market from list date to closing date. Inventory. This is how many properties are currently for sale in any market. Seller's market. When there are more buyers than properties available, leading to competition among buyers and buyers experiencing pressure to get more creative with their offers to get the seller's attention. Buyer's market. When there are more properties for sale than buyers actively shopping, sometimes giving buyers the upper hand in negotiations. For additional real estate terms and additional information, please visit our website at www.faginwillis.com and click on For Buyers or For Sellers in our menu. Be sure to check out all of the other great tools we have available for you. Thank you for joining us for Housing Market 101.